All right, everybody. Hey, thanks so much for jumping on the call. I do appreciate it. I am Rob Lanigan. They call me Reno Rob here. And we've got a little presentation for you just to kind of show you a little bit about the Reno product, how we work it, how we can help you market it, and why I think it fits in our current housing climate. I like to just kind of like dive right into some numbers on these real quick. And a lot of numbers on this page, but there's two of them that jump out to me as a renovation lending guy. The first one is that top left box there. The average age of a U.S. home is 43 years of age. Basically, that means they're ripe for renovation, and they've probably already been renovated at least once, and they're probably due for a second renovation. It seems like we kind of go in 20, 25-year cycles in terms of styles and things like that. So, that home that someone bought in 1980 when, these homes were, a 43-year-old home, probably built 80, 82, that age era, probably got renovated around 2000, and it's probably due again. Additionally, 82% of millennials said that they would buy a fixer-upper. So, that statistic kind of surprised me a little bit because, most people seem to be moving away from, doing stuff on their own and seem to kind of run away from the fixer-upper. But that statistic right there is kind of telling. 80% of millennials would at least consider a fixer-upper. So I kind of like to, sort of lean into that statistic a little bit. You've got 82% saying they would buy a fixer-upper. Millennials, that they are basically in that 28 to 43 age range. They make up 73 million people in our country. So if 82% of 73 million would consider a fixer-upper, that's 56 million people in the key home buying demographics that would look at something like this. So long story short, what I'm saying there is don't be afraid to show these things to people because they may be more interested than you think. Sure, everybody would like a plug and play, but in this environment that we have found ourselves in these last several years, we've got a real lack of inventory. We all have, lived that dream over and over. You've got someone that's, spending 6, 8, 12 months looking for a home and finally giving up saying, well, I just can't find anything out there. Stuff is flying off the shelves. They're going way above asking price. Like, how do you even budget for that? So maybe it's time to turn the attention towards the fixer-upper. Interestingly enough, too, you've got more people jumping into the home buyers market this year. The last couple of years, we've obviously seen an economic downturn. Rates have gone up, and we think that we're sort of turning the corner there, hopefully see an improved economy. Hopefully rates come down a little bit, and we will get more people sort of jumping into the home buying world, and that still doesn't resolve the dilemma of inventory, right? So this statistic, and I promise you, I am not going to spend this entire time just jamming statistics down your throat, but what I'm trying to show you here is that there's a need for this sort of loan product, and that there is inventory coming. It's said that, our banks are sitting on something like $750 billion in losses on real estate debt. Okay. That number is about 7 times the size that it was in 2008 when everything kind of, hit the fan. So I will acknowledge that probably the vast majority of that is commercial real estate. We know from, the work from home stuff and things like that as a result of COVID, commercial real estate has taken a huge hit, but so has residential real estate. So even if the numbers aren't approaching what they were in 2008, there is still going to be a lot of inventory that's going to be hitting the market. Now, banks, in order to avoid another economic collapse, have been kind of releasing stuff sort of in dribs and drabs. We're not seeing the big dump that we saw before. They're trying to control it, so they're leaking things onto the market a little bit slower than they did the last time. But I know I've noticed it, and you may certainly see it in your market as well. You're probably starting to see a few more of those, foreclosures getting exposed to the market. Okay, foreclosures tend to be a large part of what I do over and above just the regular old home that needs updated. Probably foreclosures at one point constituted about 60% of renovation lending for me. So, for a buyer, buying a home that is a foreclosure or a distressed sale or a home that, is an estate sale, something like that, there's tremendous advantages for any buyer there. Number one, condition is not a factor. I get the question a lot from my loan officers who say to me, hey, can we lend on this? Can we do this? This thing needs this, that, and the other thing. And pretty much the answer is always going to be, yeah, I don't care what condition the house is in. What I really can't do is knock a house down and start over. Okay, that's a construction loan. That's not what we do. But any home that's, we're able to maintain most of the structure is eligible for renovation financing. So, the borrower can finance the cost to repair and improve, and they're able to acquire a home that's not otherwise financeable. Okay, bear that in mind on this stuff. So a lot of these homes, and you may run into it from day to day in your, regular activities, you'll encounter a house that because of the condition, you just can't get financing on it. The bank doesn't want to lend, and you see that especially with FHA stuff. But, the condition of the home is so detrimental that the bank says, I'm not giving you money for this thing. Well, a renovation loan turns the corner on that. So you're able to acquire a home, your customer's able to acquire a home that's not otherwise financeable. And if they buy smart and do the right improvements, they're looking in a lot of cases at having instant equity, okay? Because homes that need updates, they're typically selling for 29% less than move-in ready homes. All right, so if you spend money on the right things, I do this all the time where I see people immediately plugging into 50, 60, sometimes $100,000 worth of equity, on the upper scale stuff. And like, what a great investment. Like, this truly is why all of us, kind of ended up in real estate. Like, we wanted to make money. We wanted to see, people do well and have success. This is a great vehicle for that. Now, if you're a listing agent on one of these distressed homes, you've got some advantages for your seller too. They basically get paid and they walk away. They don't have to do anything. So they're not going to get a laundry list of, hey, the bank's requiring that you paint this, fix that, and tack down this carpet. Okay. No, the seller takes their money, and it's basically under the assumption that the home is being sold as is. So there's really nothing for the seller to do. Okay. They take their money and they're gone. Now, as a buyer's agent, what you should know about something like this is be clear that your offer states the program type. So indicate that it's FHA 203K renovation or Fannie Mae home style renovation. And don't assume that the agent on the other end of that transaction knows what you mean when you say 203K. All right. FHA has designation. A regular FHA loan is a 203H, and an FHA renovation loan is a 203K. So when you submit that offer, indicate that it's an FHA 203K, but I would throw the word renovation on there as well. Okay, that should be a clear signal to the buyer's agent that, hey, your seller just has to take the money and go. They don't have to do anything. Okay, so make sure that the agent understands that. You pick up the phone and help them. I've talked to agents that have been doing this for decades, and they don't know the designation. And when I spell it out for them, okay, yeah, that makes sense. So make sure that the person on the other end of your transaction is aware of that info. And as always, I will happily talk to anybody about what it means. So if that seller's agent has questions for you and you're not comfortable with them, put them on the phone with old Reno Rob. I'll talk to them. How are we doing? Are we all right question-wise or anything like that at this point?
Rocking and rolling.
All right, cool. Thank you, Jimmy. So I get asked this question a lot of times from a buyer's agent. Hey, this guy's got a house. He wants to put it on the market, and should it make sense for us to do some of these repairs ahead of time? Can we use a renovation loan to, put a new kitchen in and all that good stuff? And honestly, my short answer for that is no. I just don't think it's a great idea. Number one, there's costs associated with it. It's a loan, it's a mortgage. You're going to go through all the closing costs, trials and tribulations. Obviously, if you can, really, really impact the home's value and what you can sell it for, then sure, maybe you want to look at it. But generally speaking, I just don't know that the juice is worth the squeeze for the seller, in large part due to money, time, that kind of stuff. Most of the time when a seller decides they're ready to put their house on the market, they've already made the decision that they wanted it sold yesterday. They don't really have the appetite to wait, 6 months for whatever it takes for reno to get done. But I will say that if you do have a listing like that, then listing a home with a renovation plan already mapped out could help you sell a distressed listing quickly. So here's what we can help you put together for a seller. We can do open house flyers that show the details of a renovation transaction. I'll cover that in just a little bit here for that specific property. I can generate some AI before and after photos. I'll show you that as well. Pretty cool technology. I'm a big fan of AI. To me, AI used to mean Allen Iverson, if you're a basketball fan, but that's how old I am. And then we're also working on putting together internet landing pages that'll promote your listing, so you can then put that out on social media. That landing page will allow you to show the before and afters. And then knowing that a home needs renovation, why don't we get a contractor in there ahead of time to give us bona fide real pricing? Okay, have him go out. Every realtor I know has a contractor that they work with, or several of them, to handle the little nonsensical repairs that you sometimes get, stuck dealing with in order to make a transaction go through. Let's get that contractor in there to give us an estimate on what it would take to make that house sing. We'll have some real numbers for a potential buyer, and then you can show that to them, and we can put numbers together based upon the contractor's bid. I can do the process of getting that contractor approved with us. And now you have a plug-and-play transaction that could theoretically move along very quickly. So as far as different types of renovation loan, there are several. I'm going to just focus on one today, but I wanted to sort of go through them a little bit just so you're aware of what they are. Right now at Novus, we're just handling two types of renovation loan. The FHA 203K and the Fannie Mae Home Style. And I would say the Freddie Mac Choice Renovation, that's the same as a Home Style. It's just an underwriting difference, really. So not too much difference between those programs. So the 203K and the Home Style tend to be a massive amount of what I do. Coming on later in 2025, we're hoping to roll out a VA renovation product as well as a USDA renovation product. But today, for our purposes of time and just, with the understanding that there's going to be a lot of overlap between all of the programs, I just want to kind of focus on the 203K. I'll throw in some subtleties about the Home Style just to know where the primary differences are. But we'll talk 203K today because really it's the most frequently used renovation program. It's been around forever. It's the one that, is kind of the go-to when people think renovation loan. Now, when I initially speak with a customer, I'll start to kind of glean some information from them that'll help me determine which path I will recommend they go with the renovation loan. So for instance, if someone is buying a 90-year-old farmhouse that has a bunch of outbuildings on it, and those outbuildings, you know how they get old gray and weathered, and slats are missing, and the roof on half of it is caved in and stuff like that. Well, if we're doing a FHA 203K, that's going to be a problem because all of that stuff would need to be fixed. Whereas if I'm doing a home style, it really doesn't care about outbuildings and things like that. So that's this conversation that I have with the customer, trying to figure out what their interest is, what their credit qualifications are, and then that kind of guides me there. But again, for the 203K purposes, there is two subsets within the 203K program. The limited 203K, which is for cosmetic repairs totaling less than $75,000, and the standard 203K, which is for repairs over $75,000 or structural in nature. So if I have to do a foundation repair and that's the only thing we're doing and that's going to cost 20 grand, even though I'm under that $75,000 threshold, because it is a structural repair or modification, I have to consider it as a standard 203K. The biggest difference between the two is that the standard 203K requires that I utilize a HUD consultant to sort of provide project oversight for me. They become my eyes in the field. So they're going to go out, do an initial inspection. They are going to prepare a report for me, much like a home inspection. And they're also going to tell me if there are other things that need to be addressed in order to meet FHA's minimum housing standards. And as a realtor, you probably encountered that plenty of times in the old peeling paint, missing handrail, windows that don't stay open on their own. That you've encountered that kind of stuff. Those are HUD's minimum housing standards, and they are items that are related to safety and structural integrity. So think, peeling paint. Well, what does that have to do with safety? Well, old house, that could be lead paint. You could have a kid eating the paint chips, and now they're riding on the little bus for the rest of their life. So we don't want that. Additionally, you could also look at that as a structural integrity issue. If you've got bare wood, you're going to have moisture penetrating into that wood. You've got rot then, and that could cause structural problems down the road. So every 203K loan is designed to address the mandatory items first. Okay, that's got to be the first priority of the 203K. Additionally, then, you can then layer in the wish list items. Oh, I want stainless steel appliances and granite countertops and new cabinets once we address the peeling paint, the missing handrail, and GFI outlet next to the bathroom sink. Okay? Does that make sense to everybody? Okay, I think you all said yes, right?
Yes. Question, how do we get the mandatory repairs checklist?
I will send that over to Mary Ellen, and she can distribute that out to you, okay? And that's a really good question. Thanks for asking it. The mandatory repairs checklist is something that I had a HUD consultant put together for me years ago. And it's non-changing because HUD is a government organization, and they don't change anything. So the list is basically 26 separate points that a consultant looks for when he goes and does his inspection. So it's going to take you to the, hey, are we looking for peeling paint? Do all the windows stay open and close on their own? Do they lock? And it's all of these items that a consultant would be checking. Great tool to hand off to a contractor who's going out to give us a quote. Also a great tool for the home buyer or potential home buyer, just a nice resource to know what you're up against. These are the things I got to care about, and should help you from there. Okay. But I will get that over to Mary Ellen after our call. So, with the renovation loan, then the client can create the house they want. And I say this with the idea in mind, I know you guys spend so much time showing houses to people and they just go, oh, I love where the house is at, but, that kitchen is like right out of the Brady Bunch. Like it's ghastly, This loan program or these loan programs let the person create the home they want, but in the neighborhood and the school district that they are gunning for. So when they call you up and say, hey, I'd like to go see this particular home, well, they're already tipping their hand. If that home was someplace that they weren't interested in living, well, they wouldn't call you about it, right? They don't want to bring their kids up in the school district with the lowest rankings, okay? So they're telling you, hey, I'm interested. Now we got to show them that this house can work for them. And if you're coming down to objections over things like that, the kitchens, the bathrooms, the paint colors, I've seen people like not want to buy a home because they didn't like the color of the living rooms and like that's ridiculous to me. Let's talk renovation with that client, okay? And let's see what we can do if we can make these numbers work. Let's stop showing them houses and let's tailor a renovation program for them. So there's a list on the left of what they can do to the house. And I will say that there really isn't anything that they can't do to the home, okay? It really, it's a make sense proposition. If it's something that's going to add value to the house, then great. We shouldn't have any problem with doing it. Ineligible improvements, these are things that become more sort of the one-off. These are more personal choices, personal preferences that don't have mass appeal, and they're not really going to be allowable for the product. So, think of the things that, most exterior stuff, like luxury items, swimming pools, saunas, hot tubs, tennis courts, stuff like that, just not going to fly. Gazebo and a koi pond. Personally, I'd love something like that. I'm really into that kind of stuff. But that's not going to be for everybody, and it's not going to be allowable for this type of loan. Okay? So the contractor, I just will say to you, this guy, other than me, is the most important part of any renovation loan. Okay? And I say that other than me, just tongue in cheek, but a contractor is so important to our transaction here. A contractor that's going to take a month getting us an estimate together is going to effectively torpedo our deal. We're going to all end up withering on the vine because this guy's taking too long. So it becomes really important that we get a contractor who can deliver things in a timely basis. I want to talk to you a little bit about what I'm looking for from the contractor, and then I'll give you a little bit of a timeline on when I like to see things from him. First off, there's no such thing as a HUD-approved contractor. That was a designation that kind of went by the wayside. It was just something that these guys would, take a test and then they would stick a sticker on the side of their truck. There is no such thing as a HUD-approved contractor. We approve the contractor on a case-by-case basis, transaction-based, or transaction by transaction. So I'm really just looking for a contractor to be licensed and insured. I want him to be in the business for 3 years. And I say in the business, preferably I like him to be on his own for at least 3 years. If he's been in business for himself for a year and a half, but prior to that, for the last 5 years was working for somebody, I can usually make that work. I want all the proper licensing to be in place as it pertains to the city or the local municipality or the state, okay? Differs from state to state, but these guys have tried to sort of skirt around licensing issues. Not going to work for me. They have to have their licensing in place because a lot of times permits are going to be required, and I need these guys to get the permits. And if they don't have the proper licensing, they can't get the permits. I want them to carry a liability policy of at least $1 million. That's a pretty standard policy, so that shouldn't be a problem. If they don't have liability coverage, then they're a fool. It's not an expensive policy, and quite frankly, if I've run into this before. Oh, wait, let me go get my policy put in place. Like, look, man, if you're a contractor that's been doing business for several years and you don't have liability policy, I don't think I even want you anywhere near my house because you're an idiot. Finally, here, I'll just touch on one thing. There's no self-help with these programs. So a person can't do the work themselves. I know that's a bit of a bummer, but I'm not paying them to work on their own house. Okay. We need the contractor to be licensed and insured. Even if the buyer is a contractor, I still can't do it. It's just not going to fly, because, this guy has a 9-to-5 job that he needs to go to. He's going to, go to his regular job. And then I'm expecting him to come home and work on this house for 5-6 hours every night. It's probably not going to happen much beyond the demolition phase. Demo's fun. He's going to, wreck everything, throw it out in the dumpster. Then he's going to be beat, tired, and lose interest. And now I've got a house that's in worse shape than it was when we sold it. All right. So I'm not going to do that. Additionally, I do want to see if we're working on a house that was built prior to 1978. If we are doing paint work to it, I'm probably going to need that guy to be lead certified, or at least his painting sub. The lead certification stuff, it's a bit of a scam. I get it. I actually have some resources that they can get lead certified for like $30 and do it as an online course. So I can always fire off a link to a contractor for that. But generally speaking, that we do want them to be lead certified if we're working on a home that was built prior to 78. All right, so I want to kind of take a little example of a house that I found in your market. Mary Ellen was kind enough to send over a few listings to me, and this one kind of jumped out to me. And I'll just couch all of this by saying I don't know, your market, your values, what's this house going to be worth in different shape or anything like that. But I liked this house because it was dated. It wasn't a basket case, but in my opinion, it was dated. It was built in 1986, so that kind of fits in that wheelhouse that I was talking about a 43-year-old home. A little newer than that, but it is due for an update. Now, the funny thing with the descriptions is, what does he say it there? Beautifully maintained, and it is. It's a nice home, but I think they said the kitchen is updated. The updated kitchen opens to a bright dining area. I thought this was pretty funny, but you tell me. There's the exterior of the home. It's fairly nice little rancher, clean, tidy. That's your updated kitchen. I don't know. I had a home that I lived in the early 90s that had kitchen counters that color with nice bleached oak cabinets. It was cutting edge in 1993. Not so much anymore. It became dated pretty quickly. That to me, it looks dated. The old stainless steel double sink. The appliances don't match. Looks like the cabinets, got the homemade Home Depot paint job. So, if that's your updated kitchen, God love you, man. That one to me is screaming renovation. This is the living room of the house. Again, it's tidy. It's well maintained. That color was pretty hip in the early 2000s. Probably not too hip anymore. I had a dining room that color in 2004. The bathroom, again, well maintained, but the old acrylic vanity top, the cabinet base looks dated. Not a bad house by any stretch of the imagination, but just dated. Same thing there with this bathroom. The acrylic top, look at the floor, the linoleum is that old school linoleum, looks like brick pavers. So, this is a house that, in my opinion, could use some love, right? So I took the pictures here and I kind of threw them through that AI generator that I have. Did a little exterior remodel and chose a couple different options. It gives me, oh geez, I probably have like 30 different options I can choose for style. I think the one on the bottom right there was like a modern, and then the top was a Northwestern style or something like that. I don't know. I forget specifically, but I liked the top one. I thought that looked pretty neat for me personally. The kitchen, I cranked that one through, and it gave me a couple different renderings. I think the bottom right one was like a Southwestern style, nice warm woods and colors and stuff like that. The top again was a modern style. You can see like it changes out the counter surfaces, the sinks. It gives you a more contemporary sink or something that's more in keeping with today's trends. AI will sometimes do some goofy things. It has a hard time with windows and doorway openings. It'll turn a window into a hallway. So, bear with me if you see anything that looks totally out of whack on that. I can go back through and airbrush a lot of that stuff out, but you might see it in these because I wasn't spending a huge amount of time on these because this was just for our purposes here today. The living room, I really love what it did with the living room. The top right picture I think looks just sexy. But you can see it took the one window on the far side there and turned, it looks like now it's a hallway. So, it does weird stuff like that, but you get the general gist of what it could be. So what we're working on for you guys is we are going to have a software program where we can import your listing and then do some photos on a flyer that shows some before and afters. And then we're going to crunch the numbers and show your buyer what that looks like to achieve, the dream, so to speak. Some more stuff here. There's the bathroom. I ran that through a couple different incantations. And the other bathroom did the same thing with those, right? So pretty neat stuff, some good technology. We're going to put that to work for us. And even with a listing, you can use this sort of stuff. But how about for a buyer who sees something that they're maybe interested in, but they're just not quite seeing the vision? Let's talk about it. Let's get in touch. I'll run those pictures through and show them what it could be. Okay, and we'll do that. I'll happily do that for people all day. This software is really fun. I love playing with it. So if you have someone that's wants to mess around with it, let me know and we can play around with it. So here's some thoughts on this house. What does it need to achieve what we just showed in those pictures? We're talking kitchen and bath updates, flooring and paint, and a bit of an exterior facelift. And I'm just spitballing. Are we talking, $125,000 to do all of that? I'm spitballing just from the perspective of what I want to do next is show you how these numbers come together and what it means to your client, what we need to be looking for on an appraisal, and that kind of stuff. I think it's important that you, as the real estate agent, understand how the numbers come together, because there are some misnomers with these programs. One that I hear all the time is, well, I hear renovation loans cost more. And is that true? Well, there are some additional costs associated with a renovation loan. I've highlighted a few of them here, primarily the consultant, the draw inspections, the draw management fees. Those are real costs. They are disclosed as closing costs, but they are part of the loan amount calculation. So while they get disclosed as a closing cost, they actually get netted out of the bottom line, okay? So I'm required to show them as a closing cost, but then by netting them out, the bottom line remains essentially the same as it would be, with a regular traditional transaction that employs the same sale price and loan amount. The one thing that you see on there is that contingency reserve. This is a required thing I build into every renovation loan. It is an amount that is equal to 10 to 20% of the contractor's bid that gets built on top of the loan. And that money is there to cover your buyer in the event of the what ifs. Okay. Remember, a lot of times we're buying foreclosed properties where there's no seller disclosure. A lot of times these things are winterized. We can't even test the system. We don't know if when they turn the water on, all the pipes are in the basement have burst and we're going to have, a shower. So a contingency reserve is there to buffer you against the what ifs. What if we're doing demo and we open up that bathroom wall and find that the tub surround failed years ago, and now we've got mold and rot and all kinds of nonsense back there that we have to spend $3,000 fixing. Well, rather than stealing from another part of the project, we have that contingency money that they can use to address those items. If that contingency reserve goes unused or doesn't get completely used, you can do a couple things with it. You could do additional work. So they could do some upgrades. Let's say they were putting in laminate counters and, because they have contingency money left over, they may say, let's do granite instead, or they could say, let's refinish the upstairs bathroom that we were going to put off until, we were in the house for a couple of years. So, you could do stuff like that. If they don't want to do anything additional, that money just goes back against the principal balance, serves as a principal reduction, doesn't change their payment or anything like that. Okay. So talking about how all these numbers come together. So you see, I've got sale price on there, renovations, contingency reserve, all that stuff adds up to $491,750. That's my total acquisition cost. For my purposes, that's really sort of like my sale price. Okay, that's the number I lend off of. So with a conventional home style renovation, a 5% down payment would be based on that total acquisition cost, not the $349,900 sale price, but the $491,000. All right. So FHA, 3.5% down payment on that, so $17,000. So this is where I think people get the idea that these loans are more expensive, because that's where your bottom line is getting influenced. So instead of a 3.5% down payment on $349,000, their 3.5% down payment is based on $491,000. So that's the number you kind of got to think of as this is where their bottom line is getting impacted. It's not getting impacted because they have a consultant or draw inspections or draw management fees. Okay? Does everybody understand that, or is there anything that's not so clear? All right. So being that the total acquisition cost is $491,750, this is the number that I need the appraisal to come in at. Okay. So when I do one of these loans, the most important thing, if you recall, I said is the contractor. I need a contractor who can get me numbers pretty quickly, because I can't get the appraisal ordered until I have a contractor's bid. I can't send the appraiser out there because he is going to give me a value based on the improvements. And if he doesn't know what those improvements are, then what can he really tell me, right? So I need a nice detailed bid from the contractor. And I really want to have it within, say, 10 days to 2 weeks of us going under agreement. All right? Because think about that. By the time I order the appraisal, it's probably another 2 weeks until I have it back. So if it's taking him 2 weeks to get me a bid and 2 weeks to have the appraisal, I'm now 30 days down the road, and only now am I ready to get that loan submitted into underwriting. Okay. So if you signed a 30-day contract on a house that needs renovation financing, you've set everybody up to fail. Okay. Unfortunately, only under the best of conditions does that 30-day timeline work out. And by best of conditions, I mean, we need to have an estimate when you're putting ink on that agreement of sale. Okay. So generally speaking, I need about a 45 to 60-day runway on these. Now, I can get them done as quickly as 30 days, but I am so reliant on that contractor. Okay. So please bear that in mind. The nightmares, you all talk, I'm sure you've heard the nightmare stories with renovation loans about how long they take and stuff like that. I will tell you, 98% of the time they take that long because we have a contractor who just couldn't, put pen to paper after a day of hanging drywall and stuff like that. And look, I get it. I was a contractor for many years myself. I played that game. I did a lot of these renovation loans. And, the last thing you feel like doing after spending all day on a hot roof is coming home at night and doing paperwork. It's a pain. And, we're in the mortgage business. We love killing trees. We create a lot of paperwork for people. So, to that end, I do try to make it easier for the contractor. I make it easier for the contractor approval process. I'll even write estimates for these guys if they can give me the basic framework. I can structure it in the way that it needs to be for the loan program. Like, I try to avoid putting these guys through the meat grinder, but if we have a guy that's taken longer than 2 weeks, unfortunately, we do need to then open the door to start having conversations with the seller and their agent about an extension, because we're probably going to miss our commitment dates and settlement dates. Okay. So
hey, Rob,
yes.
You had said earlier about possibly if a listing agent actually has that done up front, how would that help? I mean, what do you think?
Oh, 1,000,000%. That's why I suggest trying to do as much of that stuff up front as possible. The only thing that is a little bit hard to control in that is what the buyer wants to do. The buyer may not have any interest in using the contractor that you've already got an estimate from and we've already approved. They're going to think, oh, I can get this, for $4,000 cheaper from my buddy across the street that has a pickup truck and ladder, and I can't, you can't talk them out of that, okay. But, ideally, the contractor that, has a fully functioning office staff, even if it's like the contractor and his wife doing paperwork, like that's your ideal setup. But yeah, if you can get a listing agent to have all that stuff up front and the buyer agrees to go with it, heck yeah, man, I can get these things done really fast if we have those pieces in place. It's just very hard to convince someone that, we know the true path to helping them get it done. Everybody else thinks they have their own, they have their own ideas on how it would go best for them.
Sure.
So okay. I love that idea. It's a marketing strategy that I've tried over the years and would suggest to anyone that has a distressed listing to at least, let's try it and put the pieces in place. But just know what your challenges will be. But going back to this one here, so we would want that house to appraise for $491,750 because that's our investment in it, right? Now, what if that house doesn't appraise for that? That means we need to renegotiate sale price, or it means that we need to change the scope of work without impacting the value, which can be a challenge. Usually the answer is a little bit of each, but we can deal with that sort of stuff if it happens. However, the thing that I really love about the 203K versus the Fannie Mae home style is that the FHA 203K allows us to use 110% of value. So if the appraiser, can't quite get to where we need to be and his value came in at 450, well, that 110% rule lets us treat that value like it's 495. And we needed 491. So bang, now we have a loan that's worked out. So that rule can also be employed in a traditional transaction where you maybe didn't get the appraised value you were hoping to get. Now, I mean, this was a great marketing strategy, 7, 8 years ago. It hasn't really been the case lately just because, everybody's paying so much for everything and values really haven't been too much of a problem lately. But if you do find yourself in a transaction where, the value's coming in light and the seller isn't open to renegotiating, flip it to a renovation loan, flip it to a 203K, and just do something small. Just do, new carpeting, throughout. You can do these for as little as $1,500 in renovation. But by flipping it, it now allows you to use 110% of the value. So, with what you're doing, it doesn't even matter if it impacts the value or not. Hopefully by, flipping it to 110%, you've now got enough value that this loan is now imminently doable. Okay. So for my last slide, I just want to say, I touched on this a little bit earlier, that people have their nightmare stories of doing renovation loans. And I don't hide from that. I know people have had a bad time doing renovation loans. Realtors, I did one in 1998. It was terrible. I'll never do another one. I can't tell you how often I hear that. I talk to loan officers all day long who have been in this business for 30 years and, have never done one because they're afraid to. They don't want to burn their bridges. They don't want to ruin their relationships. I understand all of that. I lean into it. I welcome that conversation because, in my opinion, it's going to come down to two things. Now, the first one we've talked about, pretty heavily here. It's that contractor. You want a quality contractor who is responsive. Okay. Again, that guy that's taken me forever to get an estimate is going to sink our deal. But you also want a lender who utilizes a product specialist like your friend Reno Roth here to make sure that the entire process is handled properly. These loans have a lot of subtleties, a lot of nuance. They have things that could go wrong with them that if a loan officer isn't touching these loans on a regular basis, he's going to make a mistake. He's going to forget something, okay? These are all I deal with. I deal with them all across the country, and I handle all components of the renovation loan for you, okay? So I will interface with the contractor. I will get the paperwork, the estimate structure. I'll order consultants. I'll get all of that done working in conjunction with your loan officer. So we become sort of a tag team on this where the loan officer is dealing with all things borrower related. Okay. So income, assets, credit, that's their piece of the pie. I'm handling all things reno, and we kind of meet in the middle and get these things done for you. So again, quality contractor and a lender that's got a guy like me doing this stuff. And that's a pretty good recipe for success with these. And it's something that I think you can add this to your arsenal, and don't be afraid to show your clients renovation or homes that need renovation financing. And that's it for me, guys. So there's my contact info. You are welcome to call, email me with anything at all. Okay. Again, I will work in conjunction with your loan officer, but if you just have a quick scenario, a picture you want me to, AI, whatever you need, please feel free to reach out. If you have any questions for me today, let's do a little Q&A.
So a couple of questions we've had in there. Natalie's asking, as the buyer's agent, should we take a contractor with us to showings to get a quote after that appointment?
Any information that you can get is always, any upfront information, it always helps me on my end. The thing with taking a contractor, I'm sorry, you asked that as a buyer's agent, right?
Right.
Oh, yeah. So, yeah, I mean, if you can get if you can get a contractor in there when, they're still kind of in that kicking tires phase, that's a great idea. And it's fantastic if you can do it. Most contractors want to be, they're not going to go to multiple houses with a buyer. They'll maybe do that once or twice. And then after that, it's kind of a, poop or get off the pot sort of situation. They don't have the time to go looking at houses with people all the time. Usually, once they're under contract, then you're able to get a contractor out there. If you can do it prior to making an offer, by all means, it's not going to hurt, but I think you'll lose the contractor if they've got to start doing estimates over and over again for 6, 7, 8 houses. They're just going to kind of peter out on you.
Okay. And then another question we had is that AI software that you use something that they can get a hold of, or is that something you own or we own at Novus?
Oh, yeah, no, it's anybody can. I bought a subscription to it. It is called. Hang on a second. I gotta minimize some screens here.
Is it Midjourney, Rob?
What's that?
Midjourney?
No, it is.
And
Bear
I'm
with me. I've
wondering
got it
too,
saved
I
in
mean,
my favorites.
because some
It's
of the
called
realtors,
Remodel AI.
what is it? Remodel AI?
It's called Remodel AI. Can you guys see this?
Oh yeah.
Okay. So yeah, it's called Remodel AI. It's super reasonable. And all you do is just upload a picture. Find one here. So this is a house in the Pocono Mountains in Pennsylvania. And you can see like these are all the styles you can do to it. And then you can do some custom stuff as well. But let's just throw a modern twist on it. See what it does. Takes maybe about 15 seconds, 20 seconds, depending upon how well my interwebs are working. "25 seconds. I need the Jeopardy theme music." So there's a modern update to it. It's kind of neat, it just, and it does that for any kind of, well, you saw interior photos. So, any room, it'll do bedrooms as well. And just, great thing. Like I've been playing around with it at my house. I think I'm going to probably have to take out a renovation loan on my house to redo it now after I show my wife the pictures.
That's cool. Okay, and the other one,
Yeah,
we had, so if I know somebody that was like a subcontractor, been in the business forever, just recently got their general contractor's license, does that 3 years start from the general contractor's license, or is that like been in the business kind of thing?
Oh, I would approve that guy all day long.
Oh,
If
okay.
he's been in the business for several years and is a new GC, I'm fine with that.
Yeah. Okay. Let's see. I think there was one more question in there. Oh, okay. No, Natalie, you would talk to your current, whoever invited you to this meeting. She was asking Rob if you were the main lender contact. Yeah, I mean, he's just saying if you have questions, you can reach out to him. However, you would talk to your local Novus loan officer that invited you to this meeting, and we'd be glad to run interference and talk to you about that. Yep. Any other questions?
Can I ask a question?
Sure.
Maybe this is just more for the lender side, but what happens if you get, halfway through this thing and half the work is done and something falls apart and the deal, doesn't work anymore or something? How does the contractor get paid, and where does that leave the seller? And
well, the seller's
well,
already
understand
paid.
the way
She's closed, yeah.
Right. Yeah. So what Mary Ellen said, the seller's already paid. Like these loans, the loan closes, the seller gets paid, and the additional money that we borrowed for the renovation is just basically stuck into a repair escrow. And
Gotcha.
then money
Okay.
gets dispersed from that escrow as work is completed. Now, I have had to get involved in situations where there's a dispute and the homeowner fires the contractor, and we got to get another contractor in. Um, Not really something you need to worry yourself about, Jimmy. It's a nightmare, but it doesn't really impact you or the real estate agent or anything. It's a matter of finding someone who can finish the job for the money that is remaining in the repair escrow, and that can be a real challenge because a lot of that money, flies out the door up front for materials and things like that. And if they've had a fight with the contractor, he's probably, skedaddled with money, and it's not a good situation. And we try to keep everybody happy, so that doesn't happen very often.
Yeah, it doesn't. And again, remember, we're checking into them, we're checking their license, we're checking their insurance. So that really shouldn't be, that should be the one-off. That shouldn't be an issue. Another question.
Yeah, yeah.
Yeah.
I'm sorry, just a little further on that. I apologize, but in addition to license and insurance, I'm going to check some customer references that they provide. I will do some internet, the old Googling. We will do a little bit of we'll check to see if they're involved in any lawsuits, litigation, settled or pending. We do want to kind of know a little bit about them and who they deal with. Unfortunately, I've had some even crazy stuff come up where I had a contractor who had an arrest record for sexual offense, and my homeowner was a single mother with a young daughter, and I had to tell them, hey, this is what we're dealing with here. This is your decision on whether or not you want this guy in your house. But and she made the decision to utilize a different contractor. So things like that do come up. We do check. It's part of a large part of the reason we will fall short of recommending a contractor. I can provide a list of contractors that have used us, that we have used, but I won't say, hey, I recommend you use this guy, because you never know. So, okay, next question. Sorry.
That's okay. And the other question was, is this only for primary residences?
So the FHA product is strictly for primary residences. The home style product, the conventional product, will allow for second homes, and it will also allow for investment properties, but it has to be a single family investment property. It can't be a multi-unit. I will say that if you're trying to use it for an investment property, I don't love it for that product, or for that situation, just because pricing can be a little obnoxious. Renovation loans in our current market all have discount points. It's really just kind of the reality of the rate environment that we find ourselves in. The investors that we sell these loans to, they know that these loans will be among the first to be refinanced out. So they are charging, they're getting their money up front by charging a discount point to us, which we pass on to the home buyer. From an investment property perspective, because of all the loan level price adjustments, those discount points end up getting into the 4 and 5 point range. So in order to, get that number down, they have to put down a larger down payment. So you end up with a loan to value of 70%, 65%, just to drive a decent price. And, that becomes a point where, if you're buying this house as an investor, you may be better off and you may get more favorable terms just doing something hard money and then flipping out of that into traditional financing once the work is done. So I will look at anything, and run pricing and show you what that looks like, but it's very much on a case by case basis. I wish it was more, I wish I could do more with it for investors, because I get the question, every time I do one of these. So it definitely would indicate that there's a need out there, but the need exists for a reason. It's too high of a risk for the investors, so they have to make it worth their while.